There are millions of mobile apps out there, except most of them are awful businesses. And in fact, there's mobile apps that have gotten billion-dollar valuations that have struggled to keep up that valuation. Whether we talk about the meditation apps like Calm and Headspace, which got multi-billion-dollar valuations before being worth much less today, or Clubhouse, which was a voice-based social network that was really popular for like a minute during COVID and got a $4 billion valuation, whereas now you probably wouldn't want to pay anything for it. And so there are these businesses that really were successful and got a lot of user attention and activity that were mobile based that eventually went into irrelevancy. Which brings us to today's video on Duolingo. Now, Duolingo, for those that don't know, started out as basically a language learning app. People would go to the App Store, download it. It was free to use, and you'd be able to pick what language you wanted to learn, show your expertise, and voila. Immediately, you could start using the app, which has a lot of animations and a lot of kind of games, sounds, and it's really designed to keep you engaged so you can kind of get a little bit of a reward for continuing to learn. They have something called streaks, which is basically how many consecutive days you have used the app. And some people like to parade their 1,000+ day long streak, continue to keep that number up, which is really great for engagement. Before we get into the business model of Duolingo, you have to understand it is different than other businesses that have been very successful with a mobile app. Take Uber, for example, which now boasts a valuation of $180 billion. Most of their competitive advantage, though, lies outside of what's on the phone, which is namely their driver network. And same goes for other companies that started with a mobile app like DoorDash. One of their main advantages is not just their network of couriers who deliver the food, but all the restaurants they have signed up there, which takes a very long time to do. And so a lot of these apps that are successful on the phone have these other sort of advantages working for them. That is not really the case with Duolingo, because Duolingo's entire business really just relies on the phone. They do not have any sort of physical presence outside of the digital world, which is why this has become such a contentious stock. Because when you don't have any physical assets, you tend, not always, but tend to be more susceptible to competition, which is why Duolingo stock, in part, has been down 70% from peak. This has become very much a battleground stock. On the one hand, you have AI risk. On the other hand, you have a company that consumers love, where people are actually using this app, 50 million of them that is, every single day. And so today's video is going to be about breaking down Duolingo, understanding the business model, and understanding key risks facing it. But this video is not just about Duolingo, it is about how to analyze a business better so you can recognize opportunities. None of this is going to be me telling you whether or not you should own the stock or not own the stock, because that is not what this channel is about. But this channel is just about education. And so I'm going to walk you through the very preliminary research I did on Duolingo. This was not me spending the hundreds of hours I usually do on a business before I, present any sort of opinion. Instead, this is me spending 5 hours on it and telling you the things that are worth noting. And so let us begin with the fact that Duolingo was actually started in 2011. That very much surprised me. I did not think this was almost a 15-year-old business. And it was started by the same person who created CAPTCHA, which are those annoying things on web pages that you have to click to match the pictures of buses and bikes to confirm that you are human. That was actually created by the founder of Duolingo, Luis von Ahn. And he set out to create an app that would allow people to learn a language better. Now, you can imagine when he started in 2011, mobile apps were all the fad, and everyone wanted to create an app for that. And that is exactly what he did. They focused initially just on a few main languages and then continued to add more over time. However, it's still the case that almost everyone who's learning a language is just learning one of the 9 biggest languages. And so they still namely focus just on that. Now, the way the model works is they want to create as big of a funnel as possible. And so you want to get people into the app for free, and then over time, you want to convert them into paying users. This, of course, is known as a freemium model. There's many different apps that use this sort of model. Tinder, on the one hand, does that. They don't do it particularly well, but they still are able to convert about 10% of free users to paid users. A really better example is Spotify, who's able to convert about 45% of free users to paying users. Now, Duolingo, it depends if you're looking at monthly active users or daily active users, but if you are looking at the larger monthly active users, then their paid penetration is around 9%, which means that for the 135 million monthly active users they have, about 9% of them or so become paying users, which gets them to paying subscribers of 11.5 million. Now, daily active users is about 50 million. And so sometimes people like to compare DAUs to MAUs and get that sort of ratio. For most social media sites, it's going to be around 2/3. And so they're kind of right around in that vicinity, which is a pretty strong sort of engagement statistic. We're going to talk in a moment about this other metric I like to look at, which can really tell whether or not a company is growing really effectively. But first, just to talk about their growth, monthly active users have been growing about 20%, and DAU growth has been growing 36%, which sort of suggests that they have been successful in converting a lot of these monthly active users to more engaged daily users. And that's kind of what you'd want to see. Although on the other hand, maybe you could argue that if they had a bigger funnel that was getting more people into the app in the first place, you would have more casual users. And so then the MAUs would actually be higher. You could kind of go either way with that. That's kind of the way a lot of actual analysis works, that there's two ways you could kind of look at anything. And so it is on you as an investor to kind of interpret the data that you think makes the most sense. And that's kind of key to developing your own judgment and analysis, because your perspective is going to very much color the way that you view a certain opportunity. And so just be aware of the way you're looking at the facts and think if there's a different way you could kind of interpret the data. You might not necessarily buy one of those stories like it's a bad thing that MAUs aren't growing more than DAUs. You might think it's good that DAUs are growing more. Whatever it is, just kind of be aware of those different variables. But either way you cut it, that is very strong growth. So right before we get into this metric that's going to help you tell whether or not a company is growing really efficiently, we got to get to the actual top line numbers. So revenue growth was $220 million for the quarter, and they grew 41%. Now bookings, which is different than revenue, was $280 million, but only grew 33%. Now, to understand the distinction between bookings and revenue is also what is going to help you understand why the stock sold off 70% recently. So bookings is very much a leading indicator of revenue. And that is because when someone pays for the app, let's say you're in the app, you're enjoying it, after a certain amount of time, you kind of get fed up with the ads that they show you in the free version, so you decide to convert to a paying user. When you convert to a paying user, you're giving them usually about $80 for the annual membership. Now, if you're thinking about for that quarter, let's say, for example, it's the beginning of the quarter, you paid that $80 at the beginning, that entire amount would count towards bookings. But for revenue, only a quarter of it would count. And that is because revenue has to be recognized over the period it is earned. And so if you are buying an annual membership, that means basically every day they quote unquote earn a little bit more of that revenue they receive from you. So the math on that would basically mean that since there's 3 months in a quarter, you're getting 3 over 12 times that $80. That's how much would be recorded in revenue. As you can see though, if you are growing quickly, you're going to have a lot more bookings up front, which means a lot more cash flow up front. And then the revenue is going to kind of trail that because you're not getting all the revenue up front. You're getting the revenue over a year. And so that's why bookings tends to be a leading indicator of what revenue growth is going to look like later on. So part of the reason why the stock sold off was because of this deceleration, but also because they signaled it's going to decelerate more in the future. We'll talk about that momentarily. What we need to talk about now, though, is this sales growth metric. And so you can do this with any company, but it tends to be best with software companies, any sort of company that really relies on a lot of marketing and tends to be in this kind of LTV to CAC model when they are acquiring users. And what that means basically is that they are doing doing a lot of digital marketing, and they really have it down to a science to see how much they can pay for a user versus how long they expect that user to be on the platform, the portion of them that they expect to convert to paying users, and then ultimately how much they will profit off of that. It is when you have a business that is really growing a lot with kind of this marketing spend that this tends to be a good metric. And that's not the case for a lot of businesses. If you have, let's say, a restaurant, you can market as much as you want. If your restaurant's in, Los Angeles, you're just not going to get many customers from San Diego. In fact, the way a restaurant tends to grow is by opening up new locations. So you'd want to do math on the return on investments of new locations. Whereas in this case, when your growth, you don't have locations, it's just a digital app, you're basically invisible because no one will know you even exist unless you pay to put that kind of placement in front of people, whether that be with digital ads, sponsored app placements in the app store, whatever it is they decide. That's kind of the way they're actually driving growth. And so anytime there's like an expense, whether that is an expense or CapEx, which is on the cash flow statement, you could kind of tie it to that. And so that's enough of a preface. The way this metric works is you take the change in revenue growth over a period and divide it by sales and marketing. And so if you did this for the last year on revenue, you would see that they had $275 million in revenue and about $115 million in sales and marketing. Now, really important, that 275, that's LTM revenue change. So what revenue was a year ago, LTM, versus what revenue is today, LTM, that change is the 275 that they grew in revenues. And then the 115 million in sales and marketing, that is going to be 3Q25. So this last quarter's sales and marketing. And so you do that number and you get about 2.6 times. What does that mean? That means for every dollar in marketing they're spending, they're getting about $2.6 in revenue. That's a pretty high number. And you do kind of have to look at different businesses to get a sense of what's a good number versus a bad number. Anything over 2 is really, really strong though. There's another way you could do this where instead of looking at revenue, you look at gross profit. The same calculation, you do that for Duolingo, you get 1.6, which means again, for every dollar they're spending in marketing, they're getting $1.6 in gross profit. That's a really good number because what that means is they put out $1 and within a year, they're getting back $1.60 in gross profits. That covers the full expenses. Plus now you have a little bit of incremental gross profit to either reinvest into the business or available for shareholders. So that metric is really, really good. And one of kind of the biggest virtues of Duolingo is honestly their numbers, their growth numbers, how much they've been growing users, how much they've been growing revenue, and also just how effective of a marketing machine it has been. It is very hard to set yourself apart as a mobile app, especially in the language space. There's a lot of different language apps out there, but they've been able to do it pretty successfully. And now they also have a bit of a brand. So it's going to be a lower customer acquisition cost for them because maybe you're not that interested in a language now, but you've heard of Duolingo, and 3 months, 6 months, 9 months from now, all of a sudden you're going to go on a trip. You decide you want to learn a little bit of a language before you go. And at that point, Duolingo kind of catches your eye versus other language apps, which, who even knows of any of those? So that is one reason why customer acquisition cost could be lower in the future. They're building themselves a brand, which is, just another positive for them. And so on these growth metrics, sales efficiency is one way we could kind of call this metric pretty strong, honestly. But then the question is, of course, why is growth falling off? They not only are decelerating revenue growth and bookings, but they're even guiding to worse bookings next quarter. What's up with that? Bookings is supposed to decelerate over 10 points next quarter. That is a big, stark jump. And so that has to do with all of the fears around AI and also the opportunity with AI. Now, the CEO, Louise Von on the last earnings call, basically said that there's kind of 3 priorities in the business generally. There's monetization, there's user growth, and there's teaching. Teaching is another way we could kind of just think of like product improvement. And so basically, do you focus on trying to monetize the existing product? Do you focus on trying to get more users into that funnel we're talking about? Or do you focus on making the product better so that people are going to be more engaged, stay longer, and are going to be more likely to monetize later on? He actually gave this pretty insightful example on the earnings call where he talked about how there's things within the app they could do, basically making the free experience worse. They know grow paying users more. If you make the free version worse, some portion are going to just say, okay, fine, I'll finally pay. Another portion of users are going to leave though. And so that is the balance that they are playing around with. Right now, though, they're focusing more on basically incorporating AI into the app to make it an overall better experience. Now, if you do decide to pay for Duolingo, not only can you get rid of the ads, there's actually something called the Max subscription, which has more AI features. One of the biggest kind of AI selling points they have currently is this ability to talk to a virtual character in a native language. This could actually be a really popular feature because a lot of people are kind of nervous to practice a new language with other people. It also, you have to be very patient, and so it takes a long time. And so having an AI native ability to talk to someone on the phone in a different language, I could understand why that could really help someone learn the language quicker. Right now, though, this is a feature kind of hidden in the Max tier, though. And so some of these AI features, they want to kind of bring out and bring them down into either lower tiers or make them even a certain amount of usage free to everyone, which will just make it a better experience. There's also a lot of new content that you could create with AI. And so that is where they're going with that. In addition to that, they're expanding out categories beyond language learning. And so they already rolled out music and math in the past years, but one of the latest categories was chess. That has actually been kind of an early hit for them, where a lot of people want to learn to play chess. It's also kind of an interesting vertical because they enabled player-to-player chess, which then does create a little bit of sort of a network effect on the app, which is kind of important, but probably not big enough yet to really make such a difference. And so that is what's going on today with the app. It is kind of, in a way, a classic case of investing more back into the platform, except when they are investing in this way, they're basically foregoing revenue growth. There's opportunity that they could grow revenues, and instead they're saying, we're going to just focus on making it a better experience for everyone. And down the line, we're going to hope this funnel is bigger, that we can convert them. Now, you could kind of, though, go the other way with that and say, why did they really need to slow bookings growth just in order to invest more back into AI? They have $1 billion of cash on their balance sheet. Is it not possible that they could do both? And that is a fair kind of pushback there. I think they would say that once the product gets better and there's more of these features in there, that is what is going to enable the next leg of growth. But it always is a little riskier, kind of assuming that a business is going to re-accelerate growth. On the other hand, it's not like they're guiding to single digit growth, they're guiding to 20% growth. And so maybe if you did buy it at a $500, $600 stock price, that's not enough growth for you, but maybe at today's price, it could be. We'll talk more about those assumptions momentarily that an investor will need to make. And so right now, just kind of getting back to the basics, you have a freemium model. You want to get as many users in there as possible. You want to eventually convert these users to paying users. They have these two different subscription tiers. One of them gets rid of the ads, and the other one, in addition to that, has kind of more AI features. Now, this idea of having two different subscription plans is kind of tied to this idea of upselling, which is another potential opportunity with AI. Maybe it allows them to have more features and further differentiate the different packages they could have. It also, though, makes it kind of easier for them to maybe move into other content and build out their content database. The big thing for them is not just the language market opportunity, but the education opportunity. And whether or not you think they're going to be able to dominate that kind of goes back to what assumptions you want to make as an investor. And we'll tie this off momentarily with more risk and also what the real opportunity is. Now, when we are thinking about valuation, what I usually like to do is start with what is the current market cap? What is the current enterprise value? So right now at about $185 a share, which is when this video is being recorded, it has a market cap of about $8.8 billion. With about $1 billion in cash, that gets you to an enterprise value of $7.8 billion. And so they are going to do about $1 billion in revenue for 2025. They're going to leave 2025 with a higher annualized number. And that's just because if you're taking the last quarter, 4Q of the year, it's basically assuming that same rate for the following year is what an annualization is. And so either way, simple numbers, let's call it $1 billion in revenue, $300 million in adjusted EBITDA is what they're talking about. We're going to want to make our own adjustments to that. The big one's going to be stock comp. We're going to want to pull out of there. That's going to be about 130, 140 million. We're going to also want to add back depreciation and amortization. Those are real cost of the business. That's not so big though for them because they are, this mobile-based app. I think around maybe 10 million for the year will be fair there. And then there's this other adjustment you're going to want to do, which is going to be back out the interest income. And so when you do have $1 billion of cash and when interest rates are where they are, you are getting interest income. And this is something I do not see many people talk about in terms of adjusting normalized earnings, but it actually can be pretty important. If you look at Airbnb, it really changes the numbers a lot on them because they have some like $10 billion in cash currently, a big amount. And the reason why you want to pull this interest income out is not because it's, bad that they have it, but you do not want to be valuing this stream of earnings in your normalized earnings figure because this is not their core business. So just for a quick example, let's say a business had nothing else going on, no core operations, but it just held $1 billion in cash. How much would you pay for that? Probably $1 billion, no more, no less. And so the idea there is that $1 billion is throwing off an interest income, shouldn't get any premium multiple because it doesn't have any ability to quote unquote reinvest back into the business because there is no business, it's just cash. And so that's one of the reasons why you want to back it out. Said differently, you're basically kind of valuing a portion of Duolingo, the cash management business, which is basically like a bank, as a tech company. So I do recommend that you back out that interest income. And if you do that and then you tax it 20%, you're going to get normalized net income of about $120 million. So that $120 million versus that $8 billion enterprise value. But we are not done. We're going to look at it on a free cash flow basis because I prefer that. But there's another adjustment to look at if you want to look at it on a normalized earnings basis. You can do what is called mature margins, which is what you think margins are going to be at maturity when they're no longer growing that quickly. And I would use that figure to value them. For this business, Duolingo, it actually tends to be pretty close to what free cash flow is. And so if you are just taking LTM free cash flow, going ahead and backing out that stock-based comp, because that is a real expense. If a company decides to pay people in stock versus cash, it should not be treated any different from the investor's perspective. Because if they are paying in stock, yes, they're going to have more cash flow up front, but it also means that you're going to own less of the business. And so you should be able to account for that. We could talk more about stock-based comp in a different video. That's going to get you about $230 million in free cash flow for a 34 times free cash flow multiple. Okay, so that is where they currently are. Is that a good multiple, a bad multiple? How should you think about 34 times? There's many different ways that you can think about this. One kind of easy way is that if they are growing 20% a year, how many years will it take for them to get to a multiple you're comfortable at? So if they're doing 20% this year, next year, and the year after that, all of a sudden in 3 years, they're at a 20 times multiple. So 3 years of 20% growth will get you to 20-ish times multiple, which is below where the S&P 500 is trading today. Now, if at that point they're still growing 20%, you're probably going to be able to get a satisfactory return over time. If they're growing much less than that, then perhaps that's about the right multiple to pay for that business. It's ultimately going to depend on what the growth is thereafter, how efficient they are, also in investing in the business and what their opportunities are. And so to not just leave you hanging right there, let us talk about the key risk with Duolingo as well as what the opportunities are. Now, one of the biggest risks people are throwing out there is AI risk. What that basically means is that one of the many different AI chatbots today, ChatGPT, maybe even, Gemini, Perplexity, whichever one you want to pick, it kind of has a little bit of a consumer touch point right now. And if people wanted to learn a language, they could go directly to that chatbot and do that. I'm here to tell you that doesn't work that well. I actually tried experimenting with that to say, teach me a language, like, can we have a schedule, a day plan and all that? And it's, it can work, 100% it can work, and you could talk to it conversationally, especially with talking on voice and all that. It won't necessarily remember all your progress. It's still very much on you as an individual to kind of take that initiative. Whereas with Duolingo, it's kind of more like you just got to open the app and then they're going to do the rest for you. Whereas you're going to be constantly kind of iterating with the prompts. Now, over time, could OpenAI say, we want to have a language module and it's going to be in the ChatGPT app? Just click here, click what language you want to learn, and we're going to have a set course out from there. Yes, of course they could do that. Would that be scary? Probably, but I really liked on the last earnings call what the CEO said about that, which was that we're not just in the business of teaching, we're in the business of engagement. And it is pretty impressive that you get 50 million people to open the app every day, and a lot of them have these streaks, 1,000+ days. It very much is a different skill to get someone to want to learn versus just having the information readily available, which no doubt AI certainly does. And so you can take your own opinion on how much of a risk that is. I think the bigger risk really is not the existing AI chatbots today, but if someone like OpenAI decided to get into language modules, and as AI gets better, it'll be easier for them to introduce graphics and videos on the fly, have their own kind of animated characters. Maybe they know enough about you that it's actually even more catered to you. That is very much a possibility. I don't think that's their main focus right now. And by that same token, Duolingo also has the opportunity to incorporate AI, and they already have the market of a lot of people that are most interested in learning a language. And then beyond that, there's other categories they could expand to, but then of course, OpenAI or other AI chatbots could as well. And so how much of a risk that is? Ultimately on you to decide, but I don't think that's the clearest sort of value prop overlap, where if you are using Duolingo to learn a language for 5 minutes a day, that you're just obviously going to switch to a chat bot. Also, that hasn't really happened yet. So it's more about a future risk of them getting better, a more convincing user interface and whatnot. And so that's kind of one of the AI risks. The other AI risk is AI just keeps getting better and better. People can on command just like type in, spin me up an app that is a great language app that's like Duolingo or better. I mean, not impossible. Who knows what the future is going to hold, but also just doesn't seem like the most formidable risk, because there are a lot of aspects in app development where you do want everything to work flawlessly, and this sort of idea you could just vibe code everything to perfection. Maybe we'll get there one day. It just doesn't seem like we're going to be there anytime soon. And then the other AI risk is AI is great at translating stuff. Why do you need to learn a language? Well, that's actually kind of been true for, the past 5-10 years. There's a lot of apps out there that you could have just talked to. It would have translated it live to someone else. At the end of the day, a lot of people learn a language because it's a little bit more like a hobby. I was surprised to learn there's 1.5 billion people currently learning a language. And so they're not just doing that for functionality or utility. Some of them no doubt are. It is mostly though because it's fun learning a language. It's kind of like a hobby. And if you are traveling, it gets you more into it. If you're able to speak the local language, then, pull out your phone, type something away or talk into it and talk back and forth. I've done both when I've traveled. I can tell you it is more fun when you are able to speak a few of the words with them without the need for a phone in between. Now, before I get to this last risk, which no one is talking about, I think that's actually the real risk for the business model. In my opinion, it's something that scares me kind of the most. It's also just rising AI costs. That's the other kind of AI thing in the mix here. When they do use more AI in the app, gross profits are probably going to fall because the cost of AI is higher. And so it just becomes a less profitable business generally, even if they do end up having control of that customer. Now, let us zoom back. We talked a lot about this business, a lot about Duolingo, all these different facts, figures, stuff like that. At the end of the day, what their real advantage is that they have a grip on the consumers. They have a consumer touch point. Consumers go to them and they think, I want to learn a language. They're hoping to expand that to, I want to learn in general in education, but they're not there yet. Now, that is actually a pretty good place to be. The problem I potentially see though, as a company gets larger and larger, is it can often be the case that you get your best customers first or earlier on in your journey. And so as a result of that, it gets more and more expensive to acquire future users, and future users tend to be less engaged and less willing to pay for the product. That to me is kind of one of the bigger risks, and it's always a risk with these high growth companies, is at what point does the music stop? And you will never know until it stops, which is why growth companies, by the way, have such drastic stock price reactions to both extents when revenues accelerate or decelerate. A stock doesn't go down 70% because of anything that happens in its one quarter. It's because of what people believe that extrapolates out into future quarters. And so when you are thinking about Duolingo with 135 million monthly active users, how many people also have tried the app and are no longer using it? That is not a figure that we know. How many people have actually churned out of the paid service? We also don't know. We know that they've been able to grow enough and grow enough efficiently that they've still been a strong net grower on the numbers we've seen in terms of user growth as well as paying users. But the question is, at some point, have you basically gone through all of these different cohorts of users that now the people that get your app have actually already tried it and you're not going to be able to reconvince them to try it again? That is kind of a scarier possibility with Duolingo. And they don't show you the statistics that you could have a strong idea of how many people tried the app and then left and never wanted to use it again. And that's just another thing that suggests that growth in the future could be harder than it is today. Now, to not be so pessimistic on them, they are one of the few mobile-based app companies to ever reach, $1 billion+ in revenue and do so while being cash flow positive with 100 million+ users. That is absolutely a very good achievement. Now, the question of how strong their competitive advantages are going to be in the future and whether or not there's going to be someone else that is able to displace them is ultimately going to be on you to decide. But I don't think, to be honest, that there's anyone that really is a strong threat to them as they are today in terms of their existing business. The thing, though, is that their business needs to grow a lot in order for you to rationalize a return. That is, at least if you're hoping to get at least, a sort of historical stock market like return of 10%. That is just the way the math works when you're looking at a company that trades at 34 times free cash flows. And so you do need a lot more growth in the future. Is future growth going to be harder than past growth? Probably. I think the deceleration certainly suggests that. Could AI be a big opportunity for them to re-accelerate growth? Potentially. These are all the questions you get to answer as an investor if you are interested in this business. Now, I want to leave you with one thought, which was that when I did work at a big finance firm, I did diligence a pre-IPO company. I believe it was a Series D. This was an app-based company. Their entire product was an app. At the time, it was blowing up, a lot of usage, a similar sort of freemium model as well. What ended up happening was kind of what I was describing before, where a lot of free users would try the product, they'd go into the paid product, and then they'd eventually leave. They would churn out. And so this business was able to cover it up for quite a period of time because they're able to very efficiently acquire a lot of new users. But we didn't really know much about old users or existing users. So when the marketing goes away or when the marketing no longer works as well, that's when you see how much users really like the product. And if they're leaving quickly, you can't replace them. Now, I'm not suggesting that's what's going on with Duolingo. I am saying that is my fear, though. And without a good idea of what churn is, it's hard to kind of get around that. Now, as an investor, what you can do is your own scuttlebutt on people who use the app. Try to see how often they stay on the app, whether or not they're churning out. You could even do your own kind of survey work around that. Sometimes you don't even need to go that big. Even just getting a handful of different friends and family members can give you, a fair sense. It may not be statistically significant, but, combining it with other kind of internet searches on Reddit and even reviews can kind of give you a good sense of how people really feel about the product. Now, my experience on the product, I used it for about a year to buff up some of my Mandarin, was that I eventually got kind of bored of it. I thought it was really kind of fixed the way you're using the app. It was always kind of too slow for me, and it didn't really allow flexibility. It kept trying to get me to learn one character as a lesson, and I just thought that was a really bad lesson to spend 5 minutes learning one character. And I just kind of wanted more vocab, and so for me, it wasn't the best app experience. I have other friends, though, that continue to use the app, and some of them, though, have gone in and out between free and paid. Some of them have switched languages entirely, which is kind of interesting, and others have just abandoned it. But ultimately, it is going to always come down to what expectations you are comfortable with as an investor. And so if you want to really understand how to take the valuation of a business and see what is implied in it or what you need to happen, go ahead and watch this video here, and that'll explain to you the process of going from valuation to assumptions. And if you like this video at all, go ahead and hit like and subscribe and drop any questions in the comments below. Thanks for listening.